Today, we're diving into a massive deal that's sparking a ton of controversy in Kenya. The government is selling a huge piece of its most valuable company, Safaricom, and a top investment bank is ringing the alarm bells. So let's get into it and break down exactly what's happening and, why it matters so much. And there it is. That's the quote at the heart of this entire debate. Straight from Standard Investment Bank, the argument is that Kenya could be leaving billions of shillings on the table. So what exactly is this deal, and is it really the bargain for the buyer that some people are saying it is? All right, to really get to the bottom of that claim, we need to decode the deal itself. Let's take a look at who's involved and the numbers that are causing all this fuss. So, on one side of this deal, you've got the seller, that's the Kenyan government, acting through its national treasury. And who's the buyer? That would be Vodacom Group, the South African telecom giant. And believe me, they are making a major play here to get more control over Safaricom. The government is putting a really significant 15% stake in the company up for sale. Now, this isn't just trimming around the edges. It's a huge chunk of a major national asset. And this move is absolutely crucial for Vodacom. See, they already own a big piece of Safaricom, but this deal would push their ownership over the 50% line. That gives them a majority stake and ultimately control over Kenya's largest and most profitable company. The price tag for getting that control is a staggering 204.3 billion Kenyan shillings. It's a massive injection of cash for a government that's facing some serious debt pressure, for sure. But the real question is it enough? And that brings us right to the core of the whole problem. It all boils down to the valuation, a fundamental clash over what each and every share of Safaricom is actually worth. This is the number that everything hinges on, 34 Kenyan shillings per share. That is the price the government has agreed to. But according to some very sharp analysts, that price might just be too low. Okay, so here's where the conflict really comes into focus. The government's deal is locked in at 34 shillings per share, but in a very detailed report, Standard Investment Bank, or SIB, is arguing that the fair value is actually closer to 40 shillings, and that's their estimate of what the stock is truly worth, based not just on today's price, but on its future potential. That's a 6 shilling difference for every single share. Now, that might not sound like a lot, but when you're talking about billions of shares being sold, well, that gap adds up to a massive, massive amount of money. So when you do the math, that difference translates into a potential discount of 15.4%. What SIB is essentially saying is the buyer is getting these shares for about 15% less than what the bank believes they are actually worth. So how did the bank even come up with that higher number? Well, their analysis isn't just based on the stock price you see on any given day. No, it looks ahead at Safaricom's expected future earnings, and it also compares this deal to other recent sales involving similar big telecom companies. So you see, this isn't just an argument about numbers on a spreadsheet. This whole debate really cuts to the core of what's at stake for the Kenyan public, because the future of a true national asset is hanging in the balance. Critics are arguing that the country is potentially underselling one of its most critical assets. And that doesn't just mean losing money today, but it could mean giving up billions in future value. It's also about control over essential services we all rely on, like M-Pesa mobile money and our data networks, which are, totally essential to the Kenyan economy. The public interest is right at the front and center of this. After this sale goes through, the government's direct ownership in Safaricom will drop all the way down to just 20%. That is a major, long-term strategic shift, and it really reduces the state's influence over a company that is just foundational to the country's entire infrastructure. So, as you can probably tell, this deal is far from settled. The controversy has kicked off this fierce national conversation, and believe me, the final chapter has not been written yet. The public debate is really heating up. This deal is now facing intense scrutiny from analysts, from politicians, from the public, and some are even talking about legal challenges to try and stop or at least renegotiate the entire sale. And that leaves us with the ultimate question, doesn't it? Is this a practical deal, a fair price that gets the government some much-needed cash? Or is it a historic missed opportunity, a case of underselling a national champion and giving up value that rightfully belongs to the Kenyan people? That, right there, is the question at the very heart of this entire debate.